Hello traders, Gary Wagner here, just about noon in Honolulu, 6 o'clock in New York. It is Thursday, March 22nd, 2018, and this is the Daily Report for Gold and Silver. Tremendous action and pressure in U.S. equities today, with the Dow Jones Industrial Average plunging below 24,000, down about 724 points, closing at 23,957, and that in response to major fears about an escalation with trade tariffs in China and the inevitable outcome, if that happens, of a trade war. Gold moving higher on that news, $1328.90, putting it up about $7.40. Silver down about 4 cents, $16.37. And the U.S. dollar relatively unscathed and unchanged, up 0.08 points at 89.45. A 300-point decline in Bitcoin futures, with Bitcoin futures closing at 86.30 and 86.05 in the CBOE and CME exchanges. Attention shifted today away from the Fed and yesterday's announcement of a rate hike and dot plot that will stay the course with a total of 3 interest rate hikes this year, to the real potential of a trade war between the United States and China. That sent U.S. equities into a virtual freefall, absolutely supportive of gold. The dollar was relatively flat on the day. $13.29 is the current print for April futures, up $7.50 on the day. And if you recall from yesterday's show, in which immediately following the announcement of a rate hike, we had a continuation of the strong upside spike that was evident before the FOMC meeting concluded, I believe that we could possibly buy on a dip as early as today. And that's exactly what we did. We sent out a special trade alert recommending that traders initiate long positions. Traders taking that call got in between 13.28 and 13.29, placing a protective stop just below the 38% retracement, which sits at 13.17. Our stop recommendation is a stop at 13.15. Maintain your current long position and maintain your current stop. Over Friday's show, as well as the beginning of next week, we'll begin to discuss our upside targets and exit strategies. And traders, as far as silver goes, I did not include that in today's recommendation to go long gold. There's a couple of reasons for that. First, on the technical side, as we've spoken about over the last couple of weeks, there is a key difference between where gold pricing is in reference to the technical data and silver pricing. First, we have silver trading well below both the 200 and 50-day moving average. Secondly, we also have the shorter-term 50-day well below the 200-day. And on a fundamental front, silver is much more highly utilized as an industrial metal, and that component could put more pressure on current pricing, especially if today's sell-off in the Dow and NASDAQ are only the beginning of a much larger correction. And traders, lastly, regulatory pressure by the CFTC here in the United States concerning Bitcoin futures contract obviously had an effect, as we see Bitcoin futures trading off by about $275 today at 86.15. On a technical basis, we can identify a 3-river evening star forming right at a potential resistance point. That resistance point, of course, is the 50% retracement at 88.87. We opened right at that price point and closed below that. Of course, to actually take this particular pattern as a call and issue a sell signal, it would really be contingent upon what happens in the market today, because what we would be looking for is what is called a confirming candle. And for a 3-river evening star, it is something like the candle I've just drawn on the screen, which would be a red candle indicating a lower close with a lower high and a lower low than today's trading range. Traders, President Trump took his tariff proposal and ratcheted it up to a whole new level by announcing his plan to put a 25% tariff on a bunch of major items from China. The list of those items will be released in about 15 days, and it could certainly inflame and inevitably have an outcome as a trade war. This, of course, would put additional pressure on equities and would be bullish for gold. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.